What is a rollover? How do I do one so I do not have to pay a whole bunch of money in taxes? Is one good for me? Well, these are questions you might be asking. Well, we're going to answer a lot of your questions and more. Kenner French with vastsolutionsgroup.com. We do tax, finance, and artificial intelligence to help the entrepreneur to lower taxes and also to prepare for retirement. We've done it for 50 years. We're pretty darn good at it. We know what we're talking about. Let's get started right now. But by the way, please don't forget to like this video and also subscribe to the channel. We're new. It's going to help us a lot and it'll help you in the end. By the way, stay tuned. You'll get a nice little bonus towards the end. Now, why do a rollover? When you roll over a retirement plan distribution, you generally don't have to pay taxes on it until you withdraw it from the new plan. By rolling it over, you're saving for your future and your money continues to grow what's called tax deferred. If you don't roll over your payment, it will be taxable other than qualified Roth distributions and any amounts already taxed, by the way. And you may also be subject to an additional tax unless you're eligible for one of the exceptions to the 10% additional tax on early distributions. Not good. How do I complete a rollover? Well, a direct roller, if you're getting a distribution from a retirement plan, you can ask your plan administrator to make what's called payment directly to another retirement plan, or an IRA, by the way. Contact your plan administrator for specific instructions. The administrator may issue your distribution in the form of a check made payable to your new account, by the way. No taxes will be withheld from your transfer amount. That's important. You should like that. Trustee to trustee transfers. If you're getting a distribution from an IRA, you can ask the financial institution holding your IRA to make the payment directly from your IRA to another IRA or to a qualified retirement plan. No taxes will be withheld from your transfer amount, by the way. Another good thing. What is the 60-day rollover? Everyone asks. I understand why. If a distribution from an IRA or a retirement plan is paid directly to you, you can deposit all or a portion of it in an IRA or a retirement plan within 60 days. Taxes will be withheld from a distribution from a retirement plan. Look at the IRS specifics. So, by the way, you'll have to choose the other funds to roll over the amount of the distribution, etc. When should I roll over? Big question. You have 60 days from the date you receive an IRA or retirement plan distribution to roll it over to another IRA or plan. The IRS may waive the 60-day rollover requirement in certain circumstances if you've missed the deadline because of circumstances well beyond your control. IRA 1 rollover per year rule. You generally cannot make more than one rollover from the same IRA within a 1-year period. You cannot make a rollover during this 1-year period from the IRA to which the distribution was rolled over. That happened in 2015. You can make only one rollover from an IRA to another of the same IRA in any 12-month period, regardless of the number of IRAs you own, by the way. The 1 per year limit does not apply to the following: rollovers from traditional IRAs to Roth IRAs or conversions, trustee to trustee transfers to another IRA plan to rollovers, etc., etc. Now, once this rule takes effect, the tax consequences are as follows. You must include in gross income any previously untaxed amounts distributed from an IRA if you've made an IRA to IRA rollover, other than a rollover from a traditional IRA to a Roth IRA, by the way, in the preceding 12-month period, and you may be subject to a 10% early withdrawal penalty on the amount you include in your gross income. You need to look at the IRS specifics on that, by the way. Which types of distributions can I roll over? Many people ask us. You can roll over all or part of any distribution from your IRA except a required minimum distribution or a distribution of excess contributions and any related earnings, retirement plans specifically. You can roll over all or part of any distribution of your retirement plan except the following. Things called RMDs, are required minimum distributions, loans treated as a distribution, hardship distributions, distributions excess of contributions and related earnings, also a distribution that is one of the series of substantially equal payments, withdrawals electing out of the automatic contribution arrangements, distributions to pay for accident, health, or life insurance, and dividends on employer securities or S-corp allocations treated as deemed distributions. Now, distributions that can be rolled over are called eligible rollover distributions. Of course, to get a distribution from your retirement plan, you have to meet the plan's conditions for a distribution, such as termination of employment, as an example. Will taxes be withheld from any distribution? For IRAs, an IRA distribution paid to you is subject to 10% withholding penalty unless you elect out of the withholding or choose to have a different vehicle. You can avoid withholding taxes if you choose to do a trustee-to-trustee transfer to another IRA. Let's talk about retirement plans. A retirement plan distribution paid to you is subject to mandatory withdrawal 20% holding, even if you intend to roll it over later. Withholding does not apply if you roll over the amount directly to another retirement plan or to another IRA. A distribution sent to you in the form of a check payable to the receiving plan or the IRA is not subject to withholding. How much can I roll over if taxes were withheld from my distribution? That's a key question. If you have not elected a direct rollover in the case of a distribution from a retirement plan, or have not elected out of withholding in the case of a distribution from an IRA, your plan administrator or IRA trustee will withhold taxes from your distribution. If you later roll the distribution over within 60 days, you must use other funds to make up for the amount withheld. I'll give you an example. Jordan, age 42, received a $10,000 eligible rollover distribution from 401k plan. Her employer withheld $2,000 from her distribution. If Jordan later decides to roll over the $8,000 but not $2,000 withheld, she will report $2,000 as taxable income, $8,000 as non-taxable rollover, and $2,000 as taxes paid. Jordan must also pay the 10% additional penalty on early distribution, $2,000, unless she qualifies for the exception. If Jordan decides to roll over the full $10,000, she must contribute $2,000 from other sources. Jordan will report $10,000 as non-taxable rollover and $2,000 as taxes paid. If you roll over the full amount of any eligible rollover distribution you receive, the actual amount received plus 20% that was withheld, $10,000 in the example above, your entire distribution would be tax-free and you would avoid the 10% additional tax on early distributions. Now, what happens if I don't make any election regarding my retirement plan distribution whatsoever? The plan administrator must give you a written explanation of your rollover options for the distribution, including your right to have the distribution transferred directly to another retirement plan or to an IRA. If you're no longer employed by the employer maintaining your retirement plan and your plan account is between $1,000 and $5,000, the plan administrator may deposit the money into an IRA in your name if you don't elect to receive the money or roll it over, by the way. If your plan account is $1,000 or less, the plan administrator may pay it to you less, in most cases, 20% income tax withholding, without your consent, by the way. You can still roll over the distribution within 60 days. Which retirement accounts can accept rollovers? You can roll over money into almost any type of retirement plan or IRA. You got to look at the website, the IRS website for specific. Is my retirement plan required to allow transfers to any amounts eligible for distribution? If you receive an eligible rollover distribution from your plan of $200 or more, your plan administrator must provide you a notice informing you of your rights to roll over or transfer the distribution and must facilitate a direct transfer to another plan or an IRA. Then, good question, is my retirement plan required to accept rollovers? Your retirement plan is not required to accept rollover contributions. You need to check with your new plan administrator to find out if they are allowed, and if so, what types of contributions are accepted, because some aren't. There you go. Everything you need to know about rollovers. Seriously, maybe too much. I said you'll get a nice little bonus for staying close to the end, and I do appreciate you staying thus far. Since you made it this far, email einstein@vastsolutionsgroup.com. We're going to send you a copy of my book. Here you go. The Entrepreneur's Manifesto, a collection of smart financial advice. There is a lot of smart financial advice here. There's a lot of stupid financial advice out there. Thanks again for watching this video, and if you need more information concerning us or any of these concepts, please check us out on the web at www.vastsolutionsgroup.com. Also, please don't forget to subscribe and click that little like icon. Really appreciate you taking the time to listen and watch this video.